I know how you're feeling right now. Frustrated, confused, bored, irritated. What's going on? When will this thing get moving? Why isn't anything happening? You're not alone. In fact, I think we're all feeling this way. I certainly am. However, whilst I know those feelings are internally present, I do not let it consume me. You see, this is all intentional. Nothing in the markets is coincidental. This sudden slowdown in momentum doesn't represent a lack of interest or liquidity. That's the least of our worries. It represents what those with the capabilities to move the markets are intending to make you feel. It's all psychological. Everything we teach within our app is tailored towards psychology for this reason. Everyone overlooks it. The quicker you realize this market is coordinated to the highest level, the smoother your journey through crypto will be. We're likely all retail here, which means we're the tadpoles swimming in an ocean full of whales. Individually, we could barely move price up a single tick. Collectively, however, we're a very dangerous force, often to ourselves. There are some individuals, on the other hand, who can move the market with their money and influence. This is no secret. We have seen enough evidence of this. And for this to be the case, that simply indicates the market can be moved by a minority of the players, which tells us the market is controlled. If you have the capability to move the markets, that means you're moving the candlesticks that us, the retail traders, use to analyze, build a bias, find the sentiment, and unfortunately, in many cases, experience strong emotional reactions towards. This is the reality of the financial markets. Have you ever wondered how price reacts the second fundamental data is released? That's insiders and algorithms at work. Have you ever noticed price moving in one direction prior to the news, then suddenly exploding the opposite way? That's market manipulation at play. It's being moved on purpose for one simple reason: herding the sheep. This game wasn't designed for us to win. It was designed for us to survive. Consider candlesticks as bait. They're designed to lure you in, and they just seem to always know exactly what's going to make you pull the trigger at the worst time. The candlesticks you see on your charts do not simply indicate the rise and fall of the assets being analysed. They represent what the whales are trying to make the retail feel. Let's take a look at the recent Bitcoin drive up to $99,500 on the 21st of February. Following 18 days of consolidation, which saw BTC contaminated within the $98,000 to $94,000 range, we finally saw a glimmer of hope with a sudden breakout higher, only for the largest crypto hack ever to take place at the very moment we break to the upside, where Bybit was shown to be hacked for $1.4 billion of Ethereum, allegedly from an organisation called the Lazarus Group, with supposed links to the North Korean government. Does the timing of such an event seem like a mere coincidence to you? After 18 days of congestion, the very moment we break out to the upside, a hack takes place. This raises another question. Why did price start rising beforehand? Wouldn't that indicate someone, if not several people, knew? Do you see where I'm going with this? To understand this further, we need to zoom out of this daily range to the external weekly range. Whilst you're being distracted here, you're missing what's going on externally. It's important to zoom out. Whilst everyone fights for scraps in the small daily ranges and gamble their way to unnecessary losses, there's a greater 14-week range in play since the final week of November 2024. Conveniently, ever since we struck the milestone $100,000 level. During congestion like this, the clarity starts to diminish, and the odds of a stronger directional breakout prediction drop with it. When price begins to balance, so does the sentiment, so do the probabilities of being correct in which way it breaks out. During congestion like this, the clarity starts to diminish, and the odds of a stronger directional prediction drop with it too. When price begins to balance, so does the sentiment. So do the probabilities of being correct on which way it breaks out. We do, however, feel this will inevitably lead lower, possibly back to the $70,000 range, depending on where altcoins will be situated. This isn't anything to fear, by the way. It's actually the land of opportunity. If you saw our previous video on our belief that we are yet to see an alt season, this will make much more sense. We feel this area could be playing a fundamental role in how this all takes place and why this all takes place. To understand why we might be ranging, we need to go back in time a bit and understand exactly how sentiment has been engineered throughout this cycle, as it can potentially give us clues on where we currently are within this cycle. We often forget that BTC has now been rising since the infamous November 2022 FTX fueled crash, which marks the bottom of the bear market, which, may I add, shouldn't have logically printed the Pico bottom when going off traditional trading teachings. Once again, nothing is coincidental. Before the FTX crash, BTC spent the previous 3 weeks moving higher. How convenient. Price fell from $21,000 to $15,500 in a single week, marking one of the largest capitulation events ever seen in crypto. Yet price didn't keep falling. It halted fast, quickly reversed, and eventually reached over $100,000. So who was buying? It wasn't the majority. So who was selling? It wasn't the minority. Is it all starting to make sense? That was logically and psychologically the worst possible time to ever consider buying, yet it was actually the best possible time to buy. As the journey from $15,500 to $100,000 initiated, many narratives spawned throughout the process, with notable events such as Bitcoin spot ETFs being approved by the previous SEC administration, contributing to the next leg higher towards the $69,000 all-time high. It was only around here that the retail really started to jump back in. Notably, the approval of the ETFs opened the doors for a new wave of retail and institutional investors to begin entering the market, after price was already up 150 to 170% from the FTX crash lows. There was heavy programming underway during this next leg higher, with significant mainstream and social media broadcasting of inflows, encouraging more retail to begin entering as we closely approach the previous all-time highs. Throughout this period, as Bitcoin remained congested between $70,000 to $50,000, narratives of the halving, rate cuts, and the upcoming presidential elections circulated quickly. What most have overlooked is that Trump's endorsement for crypto came after Bitcoin was already trading for a 300% premium from its 2022 lows. And this could be the very explanation for why we're currently ranging. Compare how you feel right now in comparison to how you felt in November 2024, when Trump was crowned the winner of the presidential elections and price ripped towards $100,000. I bet you don't feel the same excitement and confidence you did during that time. That's exactly what the market and market makers are intending to achieve here. It's likely the November candle was the pricing in of the Trump news. Notably, Trump's inauguration also marked the current Pico top. This is another excellent showcase of how the opposite tends to happen during highly emotional periods within the market. When price is rising in symmetry with upcoming good news, it's very likely a top marking event. Everything since the FTX recovery has been a build-up to this very moment. Whilst most have been consumed in the green candles and narratives as always, they failed to realise that most of this rally has likely been pricing in all this news. Now that the moment of truth has arrived, the market has flatlined, leaving investors scratching their heads in confusion, as everything that was promised and expected has resulted in nothing but a mess on the charts. This mess, however, may be the key to what happens next. Whilst consumed by the lack of movement and frustration, it's likely you're talking to the market, or punching your monitor's trading view tab. I've been there, trust me. Instead of talking to the market, try listening to it. Candlesticks are a form of language. We read them and try to determine our own beliefs of the correct translation. They talk to us. It's our job to listen. Currently, I think the market is making it clear to take a step back. Let's zoom out to the weekly Bitcoin chart for some perspective. What does it look like to you here? During congestion like this, the clarity starts to diminish, and the odds of a stronger directional prediction drop with it. To me, it looks like indecision and a 50-50 outcome on where the breakout will be. You don't really need to be correct in such a situation here, you just need to be prepared. The problem is, most have only retained an upside bias for the entirety of this cycle, failing to realise Bitcoin and this cycle between here and around $120,000 could be on the cusp of slowly coming to an end, whilst overlooking the lack of altcoin performance as a negative. As always, the cycles never usually end without capital flowing through the altcoins from high caps to mid caps and eventually the low caps. This is likely the key to what could happen next. What makes this range so incredibly effective is the reality check it has provided since Trump's inauguration. Now everyone has got what they wanted, the market has failed to progress higher. In situations like this, many are now trapped, either in overexposed long and spot positions, or in financial ruin after losing everything they made during the rallies once the market stopped going up only. The recent liquidation event confirms how much overexposure was within the market off the basis of the Trump narrative. This is a common occurrence in every cycle. Most people lose what they make before the cycles even end. The entirety of this rally has been Bitcoin focused, from a price perspective and from a fundamental basis. Altcoins have been dismissed and thrown to the shadows throughout this process. As Bitcoin slowly stops reacting to positive and negative news, we can see the impacts of narratives slowly drying up, leaving Bitcoin vulnerable to a significant sweep lower. With an open road down to $80,000 to $70,000, seeing BTC reach this territory would likely mark a capitulation event far worse than FTX or COVID. This would be completely normal, however. It would simply be due to how much higher we're trading since those previous events. It's the same concept as every other cycle. It would just be perceived as worse because of the price movement such an event could create. When sentiment is taken from extreme greed to a sudden flat line of neutral, it makes ranges incredibly effective for chopping people out of the market, alongside creating a distraction to go digging deeper into the daily movements and lose focus of the bigger picture. With most altcoins trading close to all-time lows, unless you believe they're all dead, which is unlikely, BTC breaking lower would be exactly what's needed to create the level of fear and distraction for these to reach optimal pricing, comparable to the nature of previous events. You know I hate the word bullish, but you can probably tell how bullish I am becoming here for altcoins. I think the key is really just a singular sweep lower. Fast, aggressive, painful, backed with negative news to pair. There's no greater buying indicator. To simplify, Bitcoin has been on the rise since November 2022 and has achieved 600% growth in this window. It's inevitable a pullback and bear market will soon eventually follow. The majority of the $90,000 to $100,000 buyers have already been liquidated. But what about those who entered from $70,000 to $90,000 during the presidential elections? There's one final demographic needing to be wiped out down below. No bull market has ever ended without a rotation to altcoins. So if altcoins are close to all-time lows and Bitcoin controls their movements, unless they all die, it logically doesn't make sense for BTC to need much of a crash to deliver that final devastating blow. What you should be looking to do is take some profits on BTC. Take more if we break the range higher. Keep cash on the sidelines. Be open to a wipeout. DCA into alts lower and lower in such an event. If you were bullish throughout the entirety of Bitcoin's rally, and even more bullish when Trump became president, then you should remain just as bullish on alts if they suffer temporary weakness. Most are willing to take risks at all-time highs, yet so few are willing to do the same at all-time lows. Remember when we turned $30,000 to over $600,000 trading XRP during COVID, which we documented for all of you in real time. We feel that exact formula returning once again. Everything is a risk. Therefore, it's best to take that risk from the best prices possible. We currently have $250,000 in buy limits set in anticipation of what we think could be coming soon. Become a member today to see the full scope of our projections and the coins we're looking to buy. We think big things are on the horizon.